Let's get a deeper dive with the CEO, Owen Mahoney of Nexon, joining us live in an exclusive conversation with CNBC. Owen, thanks so much for joining us today. And I believe, congratulations are in order on the back of this strong set of results and certainly standing out from your peers in the industry in South Korea when Q2 was such a tough quarter for many of them. How did you pull off this kind of performance?
Well, I guess the short answer is we really believe in long-term building of our franchises over time. We have some of the biggest entertainment franchises in the whole entertainment industry, led by MapleStory and Dungeon and Fighter, and those have performed incredibly consistently over the years, and we really play for long term. So a lot of what's affecting this quarter has been based off of decisions that we made several quarters or several years ago. But on top of that, we've also had a terrific quarter with FIFA Online, as you mentioned, in Korea, and several other franchises that we brought into new markets. So it's a confluence of factors, I'd say.
But because other competitors have been struggling so hard, they are talking about new titles in the second half of this year, including NCSoft, Netmarble. Are you doing anything to brace for extra layer of competition in the second half?
Well, I'd say the games industry around the world has always been incredibly competitive, and the companies that you mentioned are amazing companies, and they put out good products. But having said that, we've always been in a position of having very heavy competition around the world, and our view is that if we make something that's differentiated, it's different from what other people are doing, and we deliver quality on top of that. We put a lot of polish into the games. We listen very, very closely to our players and try to meet their needs. And if we do that consistently over time, we'll have a good outcome over time.
You talked about this unique opportunity offered by FX rates, and I would imagine for the most part it's really about the weakening in the Japanese yen, and perhaps that led to this kind of decision, share buyback program. Do you expect, though, this trend to be continued, to be sustained in the second half as well as 2024?
Well, for us, we did an analysis as we do every quarter about what's been going on with around the industry and around our stock and around our performance. And we took, just as a thought experiment, just take our stock price 3 years ago was trading almost exactly as where it closed yesterday. And yet we have generated a lot more cash, and we've bought back a whole lot of stock, 150 billion yen worth of stock in the intervening 3 years period. And our business is significantly better, much bigger in terms of revenue, and we're looking at launching the most exciting pipeline of games we've ever had. So just on JPY terms, we think our company is a whole lot stronger, and yet on an enterprise value basis, we're trading for less than we were before. And then, of course, a lot of our investor base is using US dollars to buy our stock. And 3 years ago, exactly 3 years ago, the yen was, you could buy with $1, you could buy 105 yen. Today, you can buy 143 yen with your $1. So your buying power as a US investor for any Japanese asset is 40%, nearly 40% bigger. And so we looked at that and a couple other factors, and we said, we can't speak for other investors, but for us, boy, this represents great opportunity because we're so confident in our future, and we think that the industry and the overall entertainment industry is moving in our direction. We think that we're really at a crossroads here, and it's a great opportunity, and we're going to continue to look at it every month and every quarter going forward if this sort of situation continues, which we think it will.
Are you seeing any signs of potentially lower in-game spending or gamers getting a little bit more picky with the titles that they choose because of inflation and expected economic slowdown or the ongoing economic slowdown?
Well, it's a great question. We have always tried to be undemanding on our customers. We're in the microtransactions business, not in the macro transactions business. So as a media form, we don't ask our customers to pay us a lot of money. As a matter of fact, most of our customers don't spend any money in our game. And the idea is to make a live virtual world really, really fun for players, for all those players who don't spend any money in the game. And if we do that well, then we're not dependent on the vagaries of what happens in the broader economy nearly as much as other forms of entertainment that have much bigger ticket items, like going to a theme park is a very expensive undertaking, for example, and other forms of going skiing, going to resorts and those sorts of things can be very, very expensive. But the microtransactions business that we're in is not demanding on our customers, and it's designed not to be.
Let's talk about the China market. And I understand that in terms of the regulatory environment, it has always, well, for many years, been a tough market to crack. And just the latest quarter, the revenue actually did decrease by 5% on the year because of the high base effect. Actually, that business grew 43% in Q2 last year. What about the fact that the Chinese government is escalating its war on kids' screen time and online video games? What's your view on this market? Are you still working hard to further crack into the market, or are you sitting at your meeting room and talking about how we should sort of, I don't know, focus elsewhere?
Well, we work very closely with our partners at Tencent, and our view is that if we continue to make a great game experience for customers in China, we're going to have a good outcome. And that's the part that we can control. We don't control the operating environment that we're in. As you mentioned, a year ago, we had an incredible amount of growth. We were up over 40% year over year. So we had a tough comp. But we continue to see a lot of robustness in the Chinese market. And we think that if we continue to do a good job for the tens of millions of fans that we have in that market, then we're going to continue to have a good outcome. But of course, we also think that we've got a very bright future around the rest of the world as well. So that's what we're planning for, and that's how we manage the company. We do it very much on a global basis.
Owen, thank you so much for taking out the time to talk to us today. That was the President and CEO of Nexon, Owen Mahoney.